One of the world's top 3 leading rating agencies yesterday, Moody's, released a new outlook report on the Nigerian banking industry, as well as its forecast on the domestic economic growth in the current year and 2022. One major point of that report was the outlook that the Nigerian government's capacity to support the banking sector will weaken within the next 12 to 18 months. Joining me now to get some of the points into perspectives, put them in perspectives, is Paul Alaje, a senior economist at SPM Professionals. Good evening, Paul. Welcome to the show. Let's get started. Give me your view, your analyst viewpoint of this Moody's reporting summary on the Nigerian banking system. And do you agree with the key points in the rating agency's outlook?
Well, good evening and thank you so very much for having me. I agree with Moody. What Moody has done is to give us an overview of the current health situation of Nigeria's banking sector. Moody has touched on very important part, and for the sake of education, Moody has talked about a quality of assets within the Nigerian banking sector. So when we talk of quality of assets, what exactly are we talking about? What does asset mean within the banking sector? Asset refers to loans that bank gives out, technically speaking, and interest earned on those assets is what forms bank's income and profit. When these assets are, when the capacity to pay back these assets is not so strong or is not certain, or the people, businesses and households have been given this asset are unable to pay back, then we talk about low quality of such assets. And what Moody is saying, by implication, has now to do with possible non-performing loan. Recall that Central Bank Governor at the last MPC meeting had also mentioned that the non-performing loan in Nigeria has gone beyond 5% threshold. What we have right now is 6.3%, which is in fact higher than the projected 5% by the central bank. And when you want to measure the health of any banking sector, something is key, something is central, which is the non-performing loan. So for Moody to have said this,
Moody says that the non-performing loans, or what is called problem loans, will go from 6 to between 8 and 10%. Is that worrying to you?
It's a big issue, and it's very, very disturbing. It's very worrisome because it also proves that the banks, the big banks, deposit money banks in Nigeria, we may be having issues in the coming period, particularly with ability to pay and ability for those who have collected the money to pay back, particularly when the soft landing given to those banks in last year is withdrawn, which is one of the concerns of Moody in this report.
So the report says, and you're just touching on that now, that the federal government and the central bank will roll back those support measures given to banks last year to mitigate the COVID-19 impact. And one of those measures was telling the banks on an account or customer basis to decide how to extend the moratorium on the repayment period. The central bank itself interventions was reduced from 9 to 5%, and the central bank gave a 1-year moratorium, and that has also been extended again by another year. Now, the Moody's Investor Services says this could be cancelled. If this is cancelled, how critical do you think this will be?
It's going to be very critical. Many banks will be faced with a lot of challenges, and there may be some sort of acquisition of some of the banks if it is not properly managed, because we are in the pandemic, and it is said that during pandemic it calls for desperate measures. I am of the opinion that central bank and indeed the federal government of Nigeria may need to consider the reality of now as we still continue to battle with the impact of COVID-19. Recall that as we speak, the economy has not even fully recovered from a recession. According to the last report, we are still on 0.11%, which is approximately 0%. So banking sector is not outside the economy. Yeah, you might want to look at gains, but we need to look beyond those realities. So for me, I think the impact will be more. It will be more even and lead to macroeconomic discussions, which will lead to job losses, which is what government don't want. Recall the National Bureau of Statistics just reported 33.3% as for unemployment. And when you talk about underemployment, the figures are worrisome. So I don't think at this time we should consider policies that will make more and more, that will bring more and more economic challenges as we have it today. So I don't think that it would be right for such much withdrawal to happen.
Would you want the government or the central bank to extend the moratorium or the leeway given to bank customers to repay their loans, maybe 6 months, maybe another 1 year?
Well, I would propose a 1-year extension for commercial banks, particularly those banks that were involved and that will induce the possible increase in the non-performing loan because of quality of asset as we have it today. And we also know what is happening to businesses to the point that government rolled out plans to support household to the point of CBN supporting household directly apart from just supporting businesses. We knew this had a lot of impact, and that was also a major contribution to why Nigeria might be having very slow positive growth as at that time. So extending it, we help the banks to stabilize at least for another period while we watch the economy return
but hold
to
on a second,
the COVID
Paul.
period.
Hold on a second, Paul. The banks have robust capital buffers, quote unquote, from Moody's, and local currency is also here because we have naira liquidity. So we should go to sleep. Shall we? And the banks, of course, they reported positive results for last year. I'm sure you saw the numbers. Hefty billions of naira.
I don't think we should go with that. The quality of asset is primary for banks. Banks are primarily in the business of lending. So that will be the major requirement for measuring the bank's performance. And when you look at it, it is naira that banks have. When you convert that to dollars, you saw that banks are actually poorer in a way. So I don't think it would be right to just look at what the bank's return has been. If you look at the initial recession Nigeria experienced, you saw that most of the banks posted negative. If the pandemic extends and it's not driven by technology as we have had even during COVID, where people were still able to do transactions using their phone to buy recharge card, to do so many things on the banking platforms, and thankfully most banks now have apps, and they were able to scale through that process. If we look at that, we will be doing ourselves a lot of harms. I don't think it is sufficient to look at it. I think we should look at the health. I mean the health of the banking sector. Nigerian bank, most of them, and this is from what I know, they need support. And I think government should do that for them. Of course, banks need to also take responsibility. Paul, maybe if time permits, we will look at those.
Well, let's stand by everyone. We'll chat more to that. In particular, if the banks have to lean on the government, who does the government lean on? Let's come to that when we return. Yeah, we thank you very much for standing by. Paul Alaje at SPM Professionals. Now, the government or the sovereign is the last resort when when anything goes wrong, including the banking sector. But now this latest Moody's report is placing a big question mark on the ability or the capacity of the government. Is this a warning signal, and how serious is it?
Huge signal. Recall that President Buhari had even said that he's concerned about the capacity of government to generate revenue when he presented in 2019, talking about November 2019, when he presented 2020 budget to National Assembly and said the biggest worry now for him is how we, Nigeria, finance this budget. Nobody saw COVID coming. In 2020, government had to slash that budget at a time, and government have to look for means of finance, and that was why we did a lot in debt. Today, as we speak, according to the Debt Management Office, that debt figure is over 32 trillion naira. So for me, government has a lot of concerns about revenue generation. But somebody who also plays in that space of helping government to generate revenue, I can tell you and confirm to you that government, particularly officials, are not doing sufficiently well to find the monies where they are. When we say that a country is facing an economic quagmire, it does not mean that naira have suddenly disappeared into the space. It simply means that it has moved from pockets of some people that are more in numbers than less number of people or organizations that are, of course, lower than those that have lost money. So where the monies are is perhaps where government and authorities have not discovered. And I can tell you, you need innovation now to find money without borrowing. If Nigeria don't use innovative method to get the money, I am sorry, we will keep talking about revenue until maybe the day the God of economic miracle smile on us and we have more to generate.
Paul, just a quick one. Let me look at that particular part of that report. that the Moody's talked about. He spoke about the weakening of the government's support capacity for banks over the next 12 to 18 months. In other words, the government is weak in itself to support the banks. So traditionally, government is the last resort when there's a problem in the banking sector. I'm sure you remember the last key major problem we have in the banking industry, 2009, 2010, in which a number of banks were bailed out, hundreds of billions, ran into trillions. Now AMCON is warehousing some of them and has not been able to sell off or dispose of those assets. How important is this particular point for you, Paul? Because we still depend on oil revenue, which this report says does remain the backbone.
Well, like I mentioned earlier, the problem are multifaceted. Number one, AMCON that is warehousing some of the assets of government have found it very challenging to liquidate them on that hand, and resources are limited in supply. Number two, going back to government and resources perhaps within the covers of the central bank, it's also a challenge because government continues to receive less and less, and evidence of that is inability to intervene in the market, particularly to intervene in FX market. You've seen how central bank is reacting very carefully and is not coming all out to the bank, and perhaps that is why we are seeing so many other dynamics, some level of instability in that. So the bottom line is in the next 8 to 12 months, based on projection and supporting what Moody has reported, there may be some challenges, particularly to Nigerian banks. We are not hoping for that, but if we have a major problem, except and unless we have an external investor that wants to take over outrightly, it may become very challenging. So
when we talk about the economy in general, the forecast by Moody's was that Nigeria's economy, real GDP growth will be 2.1% this year and as high as 3.1% next year. Do you agree to this forecast?
Well, I agree. I agree because when you look at Nigeria recovery, it defeated many expectations. Nobody saw recovery going back to 0.11% in fourth quarter. But we were able to do that, and I can tell you that was really very surprising at the time. But that's on one hand. On the second hand, we now saw that for Q1 comparison will be on a much lower growth of 1.87, and Q2 will be comparing 2021 with 2020 that we had minus 6.4%. So certainly I am expecting growth between 2 to 3% at the end of 2021. And if we do more in 2022 and we're able to bring modern economy, particularly the gig economy, we might see what we have not seen in this administration even before COVID. Economy may grow to about 3%. At least for the first time, we may be at par with our population growth rates. That would be good news. That would be the bedrock. That would be the foundation of growth, which we believe after some time, if it leads to positive changes, then we can start talking about economic development.
Thank you so much for your time this evening. Paul Alaje, Senior Economist at SPM Professionals. We appreciate your being here.
Thank you so very much.
Okay.